Hello everyone and welcome to the Financial Room. I'm your host once again, Natasha Bridgmohan. We are going to be talking about tax season. It's right around the corner, everyone, and the due date is actually April the 30th, which is tomorrow. So we're a little bit late in talking about this, but if you haven't filed your taxes yet, or even if you filed your taxes, you're going to look at what your accountant has filed for you or your tax specialist and look at your T1 General and make sure that you're taking advantage of all the tax credits and especially the new ones that has rolled out. So there's a lot of basic stuff that you can use to file for tax credits and to increase your opportunity in getting a tax refund. And most of those are traditional caregiver expenses, dependent expenses, home office expenses if you're self-employed, etc. And those are the most common tax write-offs you can use. Of course, medical bills too, and schooling is another one. So make sure that you are able to maximize those tax benefits. I'm going to talk to you about a few things that are rolling out. So basically, for those who are not self-employed but worked at home during COVID, it's really important that you're able to take advantage of the claiming household expenses, which is about $2 per day you're able to write off. And there's other areas of write-off too as well, and you can speak to your accountant or your tax specialist about that. So for those who are employees that work from home, you can still write off some tax expenses. Of course, housing tax credits have gone up from $10,000 to $20,000. So for those that are first-time home buyers, you can write up to $20,000 of first-time home expenses towards your tax credit, which is also important too as well. And for those who were able to pay back their CURB or CERB in terms of CRA benefits earlier, there is an opportunity for you to apply for further tax deduction too as well. So speak to your specialist again and make sure that you take advantage of the COVID-19 benefit repayment program. And of course, a tax-free first-time house savings account. The FHSA's rolled out up to $40,000 starting this year with initial contribution of $8,000. That's really, really, really important that you take advantage of that. And multi-generational home renovation tax credit of 15% up to $50,000 in expenses with a $7,500 tax credit. So family member, whether they're disabled or not, you would be able to get that $7,500 tax credit up to $50,000 if you save those receipts. Keep those receipts. It's very, very, very important, and take advantage of that multi-generational reservation tax. Residential property flipping. So if you are flipping your property, the profits of any sale must be deemed income inclusion. So it's very, very important, except if you have been living in your home for over 2 years. So those are things that you're going to have to be careful. If you buy a property and you've flipped it less than 2 years, there could be potential tax implications. So make sure you speak to your accountant to learn about those tax credits. And of course, the basic deduction has increased for those who are $8,890 to $8,396 for age, and the age amount has increased, which means you can make more and pay zero taxes, so which is great. So take advantage of your RSPs, take advantage of your TFSA, take advantage of the FHSA. And old age repayment threshold and CPP pensionable earnings income have all increased, which is great, from $66,000 to from $64,000 to $66,000, and then from $81,000 to about $86,000 and change. So a lot of increases, a lot of tax room for tax credits. Pick up the phone and call us. We have some great accounting firms we can refer you to, and we are here for you as always. Thank you for watching the Financial Room.